Good morning, everyone watching live on BAM YouTube. Let me know in the comments where you are tuning in from. The hot sheet covers what you need to know about the real estate industry in a 24-hour time period. On today's hot sheet, I will discuss consumer and home builder sentiments towards the housing market, plus mortgage demand, mortgage forbearance, and the latest inflation data. Today is Wednesday, May 17th, 2023. I am Byron Lazine, and the hot sheet starts now. Yesterday we had a house purchase sentiment from Fannie Mae, and then today we've got the annual Gallup poll. This comes out every single year. They've been doing it for I think since 1978. Yeah, they've been doing this since 1978. It's Gallup's annual economy and personal finance poll. Twitter was a buzz with the real estate findings. I'm going to share that all with you right now and what it actually means for housing, not for the pontificator's viewpoint. Hit the thumbs up on this video and let's jump right into it. So the view of the U.S. housing market has reached new depths, according to the Gallup release. The story highlights include that 21% of Americans say it's a good time to buy a house. It's the lowest in Gallup's polling, which has been going on since 1978, as previously stated. Prior to 2022, 50% or more polled consistently thought it was a good time to buy. Significantly fewer expect local housing prices to increase in the next year. Now, if you were on the stream yesterday, let me know in the comments if you were on the stream yesterday. If you weren't, certainly go back and do the replay or re-listen to yesterday's hot sheet. I give specific data points and talking points and charts in our daily download, which is available down below completely for free. Whether you catch the show or not, you get all of the charts and sources sent to you every single day. And I provided yesterday very specific data and talking points that really counterpoint this. Is it a good time to buy? Especially for that home shopper who's confused. It's like, man, Twitter, Uncle Bud, everybody's telling me it's not a good time to buy. You should be waiting for this epic crash that's going to be coming. And if they're going to be in that house for 5, 7, 10 years, well, we had data yesterday that points towards, yes, go ahead and buy. And actually you're buying lower than the next all-time peak, which is ahead of us, right? So if you remember, this chart from yesterday shows us clearly, let me click on it here, that it can take months, right? If we go back to 1990, it took all the way to 1993, 37 months before we set another all-time high. We're only 7 or 8 months in before we have our next all-time high. You can see at the bottom right, this would be the lowest one on the chart since the 90s. Okay, so until the next all-time high, we may be in this thing for 2 years, 3 years. Okay, there's just no telling. Doesn't mean that prices won't go up month over month. All right, so we talked about that all yesterday. Let's go back into what this Gallup poll says and what had Twitter a buzz. Okay, so this chart in particular here, new low in the U.S. Say it's a good time to buy. For people in general, do you think now is a good or bad time to buy a house? So everybody rooting for a housing crash or pontificating that we're going through some type of 2008 apocalyptic crash. This is the chart they're showing. Okay, percent that think it's a good time. You see that since the 80s, we've been over 50%. And it's really just been this last year that we've dropped down under 50%, and now we're at 21%. Okay, this poll was conducted April 3rd to the 25th. 78% say it's a bad time to buy a house. Okay, obviously the lowest and the lowest that we've seen last year, it dropped under 50 for the first time. Those are the only 2 years that it's dropped under 50 since 1978. So there's something to that. We need, as real estate professionals, to understand that 1 out of 5 Americans believe it's a bad time to buy. So whether a home shopper is committed to their home purchase this spring or not, 4 out of 5 people around them at work, when they're going out for tea, when they're at the family, holiday gathering, when they're at the dinner table, 4 out of 5 people around them are saying to them, "Oh, you're buying a house? It's a bad time to buy right now." Because that's what 4 out of 5 people believe, according to Gallup. It's your job as the real estate professional, a real estate attorney, a real estate agent, to be able to educate folks who are going through that home purchase journey on what the future actually looks like. Because we know, and we talked about it yesterday, that if you're in this thing for the long haul, the last 4 decades, real estate has gone up 30 or 40% in each of the last 4 decades. So is it a bad time to buy? If you're always waiting, you're just always waiting on the sidelines. We've seen people since 2013 sit on the sidelines, rent a basement apartment, and sit on Twitter and tell everybody the market's going to crash. How much money could you have made year over year over year in single family real estate, really in all real estate, since 2013? There's quite a bit of it available, right? But for those that don't ever get in the game, they don't get those opportunities. Okay, so let's dig into some more of the data here, according to Gallup's poll. And then I'm going to switch over to Twitter and present some counter arguments, some counterpoints, and some points that you can share with home shoppers who are hearing this headline information or these feelings from people that they trust and that they know and they like. All right, so expectations for increased prices over the next 12 months. This is how people feel over the next year. Do you think the average price of houses in your area will increase, stay the same, or decrease? Okay. So in the East, 63% versus now this year, 62%. Okay, for increased prices. Midwest, it's gone from 65 to 44. So if you're in the Midwest, more people now believe prices are going to decrease than increase. If you're in the South, 61% this year versus 72% last year think prices will increase. If you're in the West, 55% think prices are going to increase versus 76% last year. Okay. If you're in a city, 64% of people now versus 73% last year think prices will increase. Suburbs, only 57% versus 64% last year. If you're in a rural area, a small town, okay, most of America, right, of land, basically, not population, but if you're in most of the land geographical areas of America, a rural area, 45% believe prices will go up. So 55% believe they're going to go down. Last year it was 71% believe they believe they would go up. So the West and the Midwest have the lowest outlook on prices, and small rural towns also have the most bearish outlook on prices. This is consumers. Okay. Expectations for local home prices over the next 12 months. Okay. Here's another way to look at that. Increase East. On the East, 62% of people, Midwest, 44%, South, 61, West, 55. That's over the next 12 months. Okay. Fewer Americans expect home prices to rise. We're at 56% do believe there's going to be a home price increase, which, listen, that's above the majority of the years here, going back to where this chart starts in 2005. I can only see, I don't know, 5 maybe data points of years where people thought they would go, up less than what they believe now. So overall, I think people believe the value of the home is going up. And more importantly, okay, and here's what people didn't focus on. Shout out to Steve Harney, founder of Keeping Current Matters. He did focus on this yesterday in Twitter, and he put out a great chart. This is a chart. I mean, if you haven't signed up for the daily download, which is completely free, gives you all of our sources and charts sent directly to your inbox every single day. That link is down below. If you haven't done that already, I just don't even know why you wouldn't, but it'd be worth doing it today just for this one particular chart. This chart should end up on your social media. This chart should end up really going out into an email to your database to remind consumers who are hearing all the noise that when you're looking to put your money somewhere, there's no better place than real estate. Okay. And for the 11th straight year, let me just fact check myself that it's been 11 straight years. I believe that is the case. Yes. For the 11th straight year, according to Gallup, Americans have voted real estate as the best investment yet again. And this is the 2023 Gallup poll of Americans' choice for best long-term investment. 34% believe real estate is the best investment. 26% say it's gold. I don't know why. 18% say it's stocks. 13% say it is their savings account. Those are some misinformed people if they're paying attention to inflation. And then 7% say bonds. Okay. All right. 1 out of 3 people say overwhelmingly real estate is the best investment. Okay. And we didn't ask, I would imagine if you're into gold, your number 2 choice is probably real estate, right? So if you were to say, okay, what came in second place for everybody, I think real estate would get padded up even more. This chart should be in an email, in a text message, on your social media for sure, to remind people, despite all the noise, despite the lower transactions, despite the inventory, despite the mortgage industry mess that we are in, not a mess like 2008, but just mess in terms of they're not getting enough business. The interest rates are high. Jerome Powell's tried to ruin that business for them. Despite all of these things, real estate continues to be the best investment. As we move forward into more decades of money printing eras in this country, if you think we're done printing money, you're kidding yourself. As we continue down this path of printing money and probably high inflation never goes away, right? We're trying to get it down to 2%. It never really goes away. The new normal might be 3% when you look at how much money that we're printing. When you continue to fast forward that trajectory of kicking the can down the line like America is doing, real estate is going to do nothing but continue to go up in value. Look at our friends to the north and what's going on in their home values in Canada. All right, let's go to Twitter and see what some of the commentary was. Some big names chimed in on this. Okay, David Sachs, who's one of the founders of PayPal. He was part of that PayPal mafia, they call it, with Elon Musk. He makes a tweet with this chart, and you're going to see this. This is going to be the counter chart to the one I just showed you. Okay, this chart here, everybody's going to be clamoring on this. This is what your consumers are going to be seeing a lot of. That 1 out of 5. I saw a headline in Fortune. Fortune does a great job. I saw a headline in Fortune this morning. 1 out of 5 people think that now's a good time to buy. It means 80% of people think it's a bad time. They're going to harp on this. According to Gallup, fewer Americans now than ever believe it's a good time to buy a house. This is what you're going to see. Puts the source, which we have in our daily download here from Gallup. Elon jumps in. The massive jump in monthly payments for a 30-year mortgage due to high interest rates obviously greatly reduces home affordability. Absolutely. And I chime in and say, yes, absolutely. And we want lower rates. And yes, we need to cut builder regulations. We've been talking about that here on the hot sheet. We'd love to have Elon come on to the hot sheet or to a BAM debate, or David Sachs. That would be fantastic. They could tune in and learn something. We need to build more affordable homes. We can't do that with high regulations. But none of these facts change the reality that Americans should be striving for home ownership. Homeowners are 44 times more wealthy than renters. And when we look at this chart, and we're just reminded of what home price growth does in this country, decade after decade after decade after decade, the last 4 decades, every single homeowner has experienced 30%, 40% or more in home value appreciation on every decade. If you're flipping, I get it. You're going to be running a risky business. That's a business model. But when we're talking about home ownership and the wealth that it can bring to you and your family, it's unmatched. There's nothing like it. The utility of being able to use it. You can't hide from the rain and sleep in a stock. You can only do that in real estate. So using real estate and being able to actually get that equity, that long-term equity, is something very unique and something that isn't going away. All right. So for the 11th straight year, ultimately Americans vote the best long-term investment is real estate. Now, the problem that Elon highlighted, and maybe David Sachs was alluding to, but he's just putting out the headline that people think it's a bad time to buy, continues to be exacerbated by our government. Okay. And so NAHB just released yesterday, same day as the Gallup news, they released a blog talking about this government plan to adopt the latest energy codes. It's going to be a blow to housing affordability. This is what I'm talking about with the regulation. You can't expect builders to come out with an affordable product when we continue to do dumb things like this. In a move that will raise housing costs, the U.S. Department of Housing and Urban Development, HUD, the Federal Housing Administration, FHA, and the U.S. Department of Agriculture, USDA, are proposing to increase the stringency of energy codes for the new construction of HUD-insured and USDA-insured housing. And then they want to get up there during campaign time and cry that we don't have affordable housing, and they want to blame it on the builders, and the builders are the ones that have to go through these types of regulations. Under current law, builders constructing new single-family and multifamily housing using this government financing must conform to the 2009 edition of the International Energy Conservation Code for single-family low-rise buildings and the 2007 edition of blah, blah, blah for multifamily, whatever. The Biden administration is proposing that the new construction of homes under certain federally financed programs leapfrogs several code iterations and adopts the 2021 International Energy Conservation Codes. Okay. NAHB is clear that this is going to make housing more expensive, not more affordable. The National Association of Home Builders is clear that they want more of an affordable product. Okay. That being said, we referenced it last week, I believe it was, or the week before on the stream. Before you even put a shovel in the ground, it costs builders $200,000 before anything's even happening. I mean, and that's on the low side. That's on the low side. If you're talking about a big development, you're talking way more than that. And so that we're never going to get to a place where we're able to provide an affordable product and get homeowners on that lower side of, what they can afford, on that lower scale, into home ownership unless we can incentivize and stimulate the top. Okay, saving somebody $3,000 on closing costs when homes cost $400,000. New construction on average costs $550,000 right now. The median price is $450,000. There isn't new construction affordable options in this country on the whole. I know Jody in OKC, she's got affordable. I know Dawn in I think it's Kaufman County, Texas, right? There's affordable, but the majority of towns and cities in America do not have an affordable product. The average is $550,000 until we can take regulation out. This is how I would stimulate affordable housing. I would make a deal with NAHB and builders. We're going to take these regulations out. Yeah, follow these processes. You don't build a bad product. You're going to get sued and lose your, lose your company if you build a bad product, all that kind of stuff. But we're going to take the regulation out. The cost that just gets sucked up into government, we're going to take that out on the trade that you build price homes at this price point and only sell them at this price point. It's pretty easy, but what they want to do is continue to, appease somebody who's, big on energy conservation for, for votes or for lobbyists. And so they come out with these plans. They make it harder on builders. Then they talk out of the other side of their mouth that, oh, it's the builders. It's the builders' fault. Speaking of builders, home builder sentiment just came out yesterday as well. Home builder sentiment pulls out of the negative territory for the first time in nearly a year. Builder confidence in the market for newly built single-family homes rose 5 points in May to 50, according to NAHB and the Wells Fargo Housing Market Index, HMI. It's the fifth straight month of gains and the first reading of builder sentiment since July that wasn't negative. Of the index three components, current sales conditions rose 5 points to 56. Sales expectations in the next 6 months increased 7 points to 57, and buyer traffic climbed 2 points to 33. So builders are pretty low on buyer traffic, They're saying that buyer traffic is not anywhere close to what it was the last couple of years for them. That's on the whole. Your market, you may disagree, but on the whole, in most markets in America, this is home builders' feelings that traffic is way down. As an agent or somebody who's maybe a marketer in real estate, your ability to drive traffic to builders would showcase value. Right now, builders, more than they have in the last 2 years, are looking for opportunities to increase traffic. If you can provide that value as a real estate professional, you're going to get more opportunities from builders. You're going to be able to have a relationship with that builder and potentially do business with that builder. Here's the chart here, shows you where we sit back up to 50. So for the first time in the last in the last year, rather, we're back at that 50 mark. Obviously still well below, I think, probably where the NAHB want the builder sentiment to be. They want to get back up into that 55 to 70 range that you see on the screen there. Certainly anything over 70 would be absolute gravy train, like we saw from, just out of the start of the pandemic until interest rates went up. Okay. There's a home builder sentiment going up, feeling good. Traffic still down. Speaking of traffic being down, mortgage demand dropped again last week as interest rates continue to bounce around that 6.75 mark. We're kind of just like edging up on, a 2-month high, and then we drop back down to 6.5. So mortgage applications to purchase a home dropped 4.8% in the last week compared with the previous week. Applications to refinance a home fell 8% for the week. Okay. It's 26% lower on mortgage purchase application than the same week 1 year ago. Okay. So we're missing 1 out of 4 mortgaged buyers in this market. We know 3 out of 10 homes are being purchased cash right now. But we are, and that's in line with normal times. It's not abnormally high. So 3 out of 10 purchases being cash is not, oh, that's high and that's making up for the mortgage buyers. Nope, that's not the case. We are, and this is why transactions are down. We're missing 26% of mortgage demand during these higher mortgage times, like mortgage rate times. All right. Just an update from yesterday. I know we talked about delinquencies yesterday. Action-packed hot sheet yesterday. Make sure you do the replay or the re-listen. And so we did talk about forbearances being wrapped up into that delinquency number. Share of mortgage loans in forbearance, just as an update, which was also released yesterday, has been decreased 0.51% in April. So Mortgage Banker Association reported this, went down 4 basis points from 0.55%. And according to MBA's estimate, 255,000 homeowners are in forbearance right now. Mortgage servicers have provided forbearance to approximately 7.8 million borrowers since April 2020. So we're basically down to the very last few, and that continues to subside. Here is the forbearance percent by product type. You've got FHA being in April 2023 compared to March 2023. Here's how they've all kind of gone down from FHA, VA, Fannie, other conventional. All right. There you go. I didn't put that down below in the daily download, but if you want it, just let me know. The link to this source is in there, so you can grab it from there. Quick update on inflation. Retail sales rose 0.4% in April. This was just released yesterday. It's less than expected as consumers struggle with inflation. So the estimate was 0.8%. So it came in at half of expectations. Auto sales increased 0.4%, which was in line with expectations. Miscellaneous store retailers, led gainers with a 2.4 increase, while online sales rose 1.2%. Health and personal care retailers saw a 0.9% increase. It was the first positive reading since January, and followed a 0.7% decline in March. So they were expecting us to have a positive increase at 0.8, ended up being at 0.4. So another signal that inflation, yes, is indeed cooling as we beat expectations there, although it did go up, but it did beat expectations. That'll be, I think, another feather in the cap for hopefully the Fed to pause interest rate hikes. A lot of uncertainty, obviously, with the debt ceiling. The Speaker of the House just came out and said doesn't expect that to happen. He's meeting with President Biden. We'll keep our eyes on it. The Treasury markets certainly are keeping their eyes on it. And the 10-year happens to be just up a little tick today, 3.544. If we can get, that whole thing behind us and kind of move forward with what seems to be a weakening recession, this number should start to pull down. We've been saying that. Obviously, the 5-day trend is that it's been going up. I do expect with this number that you would see a 30-year fix stay flat today, or maybe jump up a little bit closer to 6.75. We got down to 6.5 last week, just under it, and now we're back up to 6.7 on the Mortgage News Daily 30-year fixed daily survey. That's your update on everything housing and mortgage for the day. If you haven't done it already, go down to the link below and sign up for BAMX. Become a better agent. Everyone tells you what to do. BAMX shows you how to do it. We've got member courses loaded up and ready to go. There's live streams every single month and a Facebook community. You can get in for the annual subscription at basically what it costs you for a cup of coffee a month. I think we have a hot sheet code. Put in hot sheet as your discount code on the annual subscription. Haley, can you confirm that? I don't know if Haley can hear me. Maybe she can put something in the chat. I believe that is the case. We have the hot sheet code. Use hot sheet to get 10% off of your annual subscription on BAMX. That link is down below. Check it out. Appreciate everybody tuning into today's hot sheet. Have a great Wednesday. And until tomorrow, toodaloo.